Hello and welcome to the Birchal Podcast. My name is Emily. I am your host. Today I am joined by Stephen Graham, who is the co-founder of ShadowBoxer, which is a venture studio that's known for their deep involvement in the startup ecosystem. Not only do they find and fund innovative startups, but they also help them grow. Welcome, Stephen.
Hi, thanks for having me.
Thanks so much for coming. So for those who don't know, could you explain a little bit about what a venture studio actually is?
Absolutely. There's probably a few different types of venture studios, but really simply, a venture studio is there to support a startup not only with capital, with some of the operational requirements you need to kind of get a business up off the ground, launched and scaled. Specifically for ShadowBoxer, that is tech and go-to-market kind of capabilities. So we've got 30 people, a mixture of engineers, product managers and designers and strategists that can help a startup go from 0 to 1. And we invest some of that time and resource into those businesses rather than just charging a fee like a consultancy would do or an agency.
Ah, okay. And so how do you find these businesses, or do they find you?
It's a bit of both. I wish we had the same deal flow as, a VC does, where everyone comes knocking on the door. But we've actually probably get a good amount of our partnerships come from our existing relationships with venture capital firms, ecosystem partners, like yourself, Birchal, as well as our personal network. So a few people within ShadowBoxer are also angel investors. And obviously once you've helped, create a success story with one business, it often leads to another and another and another. So we're really lucky to have a good referral network too.
Right. So obviously you had to start somewhere. You didn't just wake up one day with this venture studio and everybody's flocking to you and you've got all these amazing partners. No. How did you start ShadowBoxer from the ground?
I think like all good ideas, it was completely different when we started. We all came from an agency holding group. So we used to work in a big advertising group called Dentsu. We were part of a big digital agency called Isobar and had a bit of a passion area for new products and venture work in that business. We had no intention of starting a venture studio when we actually launched ShadowBoxer. We just wanted to kind of get out and try something new. We happened to work with some awesome startups, one business called Doshii, which actually sold to Combank. And
so I know the founder. We've interviewed him for the podcast. Oh, Sean.
Yeah, Sean. Yeah, exactly. Yeah. So he was a really good mate with one of my co-founders, Conrad. We started doing some work with Sean. And the reality is, and I hope you won't mind me saying, he was like, hey, I haven't got much money to pay you, but I can give you some equity in my business, and I reckon we can get to a good outcome over the next 6 months. So we took a bet, really. And this was, right at the start of our business. I don't even think we had a bank account yet. And we were, it was in the middle of COVID. We loved the Doshii business. It was a great time for that business. Lots of digitization of hospitality venues. And, within 6 months, we ended up turning a bunch of effort into an equity position, which translated to cash because they sold to Combank's X15 in December. So we had a really good accidental proof of concept for the venture studio business model. Now, a lot of that's luck and timing. Lots of venture studios don't operate that way, and it will take years to get to that sort of an outcome. But it really spurred us on and helped us position ourselves better. We just love working with people who are on a mission, like Shauno, wanted to work with more founders and early stage businesses. And we really felt that, there was a gap between what those businesses can afford in terms of resource and capital from external consultants. And sometimes you need to augment your team with an extra bit of beef during a key period of time. So hopefully we've helped, and since then we've been able to help more startups with that kind of a value proposition.
So when you're looking to work with startups or they're looking to work with you, what are the key factors that you look for in these businesses before joining forces essentially and building that partnership?
Yeah, I think firstly it's about the stage business is at. Like we play really well before a business has found product market fit. I think we're really good at launching things and we're really good at helping validate and build a culture of experimentation and optimization towards those key product market fit metrics you want. And then that business is usually in a position where it can go and raise some more money, invest more in their team, and kind of copy paste for go-to-market efforts. So that's kind of the first thing. It's like, are you in that kind of stage, and can we really help? And we obviously look for technology-enabled or technology-focused innovations to work with. We don't have a particular industry bent, or haven't at least to date. We love sustainability. We absolutely love consumer software too, which not many other investors do. But obviously we also love B2B SaaS. And we've had a good bit of experience in kind of some hardware software plays as well. But so that's always a bit of a small lens. And then really the other lens is, do these businesses, have they come from a really good, reliable source? Like, are we being referred by or referred to from one of our venture capital fund partners that we've invested in? Are they one of our portcos or a business they would look to invest in? Or has it come from an angel investor we work with closely who's, kind of gone, hey, this founder or this team are awesome, they could do with your help? I think that usually is the lens, and we kind of take it from there.
Okay. So from a personal perspective, how did you end up here? Is this something that you've been involved in for a long time? Did you work for a venture capitalist? Where did this interest in beginning a venture studio come from?
I think, certainly no. I definitely wasn't always in the venture space. My background was in, firstly as a journalist, lasted about a year before I realised there wasn't a lot of money in that in 2008 as everything was getting digitised. I then moved into advertising, and then from there moved into digital product kind of agencies and consulting. And I think the theme throughout all of that was creating things and making stuff. And I think the passion around ventures has always been, an interest in innovation, and interesting in what's next, and probably what spurred the move to start ShadowBoxer and really to double down on that space was just the invigorating feeling you have when you're working with someone who is on their life's mission, doing their life's work. I think human beings get a lot of purpose from a really big, meaningful goal to go after. And if you haven't got one for yourself personally that aligns to your career, it's great to then borrow someone else's and get along on their mission. And I think that's what we've kind of done with ShadowBoxer, really. So we did a lot of that type of work with great founders in our previous lives, but we wanted to essentially double down on that with ShadowBoxer and get rid of all the other stuff. So working for some of the larger enterprises as part of a large holding group as Dentsu. I think we wanted to kind of get away from that. I mean, that said, we have also now sold to a pretty significant business too, but that's an interesting kind of conundrum and opportunity as well.
I'd love to hear about the Reece acquisition, actually. I mean, I think it's such an exciting move for you. How did that come about?
Honestly, I think we've had good relationships with that organisation for a few years since our start. A really good friend of the business and person we've worked with in previous lives too also happens to be within the Reece Group and head up innovation and run the big innovation group, which ShadowBoxer is now part of. It's funny, a venture studio typically isn't a business you build to sell. You try and build businesses that then get to a capital outcome further down the line. But I think at the start of last year, we were exploring how we could get closely aligned to a venture capital fund, how we could maybe not have an exclusive industry focus, but build some speciality, and particularly had an interesting, construction and the built environment from a few client experiences today. And I think Australia's got a really good construction and trade tech ecosystem too. And we were working with Reece already as a client, and then suddenly the opportunity came. Well, actually, they've got a big digital mission. They've got a great amount of portfolio companies they've already invested in as part with their Super Seed, their VC fund. Okay. And suddenly you could see how we would fit and align with their strategy. And it, one thing led to another, as they do. And then suddenly, we were all getting our Reece gilets and T-shirts and merch.
Are you going to be working at their beautiful offices?
We're actually based in Collingwood in the innovation groups, but I'll definitely be in the works around the corner in Cremorne quite often too.
I walk past it all the time on the way to the pub, actually. That's near our office. Obviously. They are in a key location across from the pub in Cremorne. Yeah. So I think it works out beautifully for them.
Well positioned.
I mean, it'd be tough working there, I'm sure. But yeah, every time I walk past those offices, I think, who gets to work here? This looks stunning. So hopefully you get a few days in there every now and then.
We can be in there whenever we like. It's pretty snazzy, I have to say. It's pretty snazzy. And it's a good business. It's not often you get a very, mostly family-owned AXS 50 listed company, and certainly one that wants to buy a venture studio because they believe in, investing in innovation for essentially what was typically perceived as an analog kind of industry.
Yeah, absolutely. So what do you think the main differences are going to be in terms of the next steps now that you have been acquired versus when you were independent doing it on your own?
Yeah, I think for the first thing will be some of the work that we do will obviously be a bit more focused on Reece's agenda and the innovation agenda that organisation has. So we'll be doing a little bit more work with Superseed's portfolio companies. So they're all going to be trade and construction tech focused businesses or technologies that are relevant to that industry. And then we'll be doing a lot of, digital product development for Reece itself and their customer base and their branches. So that will mean that I wouldn't say it, changes our focus as a business, but it gives us a really solid home ground advantage in construction and trade tech, and obviously with a big access to distribution for new products with the Reece network of customers and branches. So that will change. That'll give us a little slightly different flavour. The other thing will be our approach to investing our time and effort. So we probably won't invest in startups in the same way we have in the past. It'll be very much aligned to Superseed's agenda. So if there's a really interesting, let's say, computer vision startup that Superseed want to invest in, we may go alongside them on that investment and invest some time as well as Superseed investing cash. So it'll be much more closely aligned to their mandate and agenda when we do. But other than that, it's kind of all business as usual, helping great startups and great founders go from 0 to 1, wrapping an awesome team around them and hopefully making some big impact.
Love it. So obviously you've been in the startup ecosystem for quite a while. What do you think the main changes have been since you started ShadowBoxer versus today?
Well, it was March 2020 when we conversationally started ShadowBoxer. And I think from that date till about, maybe late 2021, the market was pretty frothy. There's a lot of excitement. There's a lot of cash being strapped. People were spending money willy-nilly.
What a time.
And it's just not like that anymore. And I think, there are people who are smarter than me who will talk about the macroeconomic factors, but I just know it's harder for founders out there. They need to work harder to achieve the same outcomes, to find money, and use resources really well. And I hope that we can play a role as a different sort of, access to capability to get from A to B than maybe has always been there in the market. I definitely think that resilience is more important than ever with founders and startup businesses out there. And really good fiscal discipline, I think, around how you spend money on growth. Obviously we're investing money in these businesses to grow. I just don't know if we have the same luxury of grow at all costs as potentially we used to. So having pathways to profitability and working hard to keep a board and investors aligned on how we're going to spend that money is probably a much more important focus, or at least has been upped on the volume in recent times.
Yeah, absolutely. I think working at Birchal, it's very similar. I have a super similar issue, and I'd say I'm the same. I'm probably not versed across macroeconomic conditions as some others are, but that's the thing. People are coming into Birchal and they say, hey, I remember this company in 2021 raised $4 million. How do I do it? I say, well, can you go back to 2021?
Yeah.
A time machine would be amazing. When you're constantly being bombarded with messages about the cost of living crisis, and therefore people aren't willing to part with their money as easily as they once were. So as a business founder, you've got to learn to pivot and be agile and flexible with how you're working with your business, your strategy, and your business model as a whole. And that's why you're seeing a lot of these small startups. There's a lot of redundancies going around. There's a lot of a lot of shutdowns, sadly, and it's a hard environment to be in. And I imagine from a venture studio perspective, that's hard, and it's hard to communicate with these businesses. How do you manage that?
Oh, it's the hardest part of this job is how high stakes everything is, and the fact that most of the projects you work on are at high risk of just disappearing into the ether. And it was a beautiful time. We had some beautiful moments, but actually it's something that gets put on the shelf, which can be really heartbreaking and I think demoralizing sometimes. But that's why when you have the win, it's so big and it feels so great. I think for us, it's made us be a bit more ruthless over the past couple of years of where we spend our time and some of the conversations we have with certain partners and where we choose to invest. It's funny, you've got this dichotomy as a business which wants to do and make stuff. Saying no to making something can be quite it's a bit of an oxymoron almost. We like to be yes people, but in this game you just can't be. So that's definitely been harder. But we've always had a pretty strict investment process and mandate. And then when it comes to I think the projects we work on, we've always been pretty accustomed to having hard conversations and having to be open. I think it creates a better partnerships. And listen, no one can tell a founder that this is a way to go for your business, but you can advise, you can help and give them all the information that they can to possibly make a good decision. And I think the best founders are really good at that. They're pretty dogmatic with their perspective, but at the same time will crowdsource enough inputs to validate their opinions too.
Yeah, absolutely. I think the best founders that I've found? That makes sense. That makes sense. Are the ones who listen to advice, the ones who are asking for advice, taking it on board and actually adjusting because of that. And I think that the way that you guys work and the way that you help founders is giving them that advice and strategy to grow and hopefully adapt to current market conditions in particular. As a founder yourself, what do you think have been the main challenges that you've faced as a business, and how have you overcome those?
I think as we've gone on our journey to find our own kind of product market fit, I think reconciling the commercial model of, essentially selling people and time and how much it costs to hire and support those people in meaningful careers, and with the, startup mindset of essentially being able to find ways to go and build product and do anything below what you typically expect at a market rate for cost. So I'm talking about people really, and how much it costs to build things and time and effort. So that's been the biggest challenge we've tried to work out, over the past few years, is trying to get that optimal P&L balance. And where can ShadowBoxer create outsized value versus a startup just hiring people as one? And how can we overcome some of those, some of those typical challenges for the founder or an investor might see in what would be considered outsourcing to an external partner to build product or work on go-to-market strategy and all that kind of stuff. And I think where the model we created is probably was our kind of answer to that, and how finding ways for our team to be incentivized beyond just their salary on projects they worked on, so they really felt like they were the SWAT team coming in to be a part of this startup for a period of time versus a traditional kind of external agency kind of relationship, where as motivated as you are to do good work, there's still a line between your skin in the game versus the founders. So we tried to manipulate that as environment as much as possible to go with that. I'd say the other challenge that we've probably faced is around it being adaptive to technology and making sure we'd always have our fingers on the pulse. We've got a great engineering team, and we're great at building certain types of products, but knowing when to say yes and no to certain projects, or when we should say hey to a founder, hey, it'd be better to build this initial MVP or proof of concept using an off-the-shelf tech or some sort of like no-code solution, knowing that actually that's less of a commercial opportunity for us, but better for that business, and like helping navigate founders through that journey of when do you invest in tech, really, and when do you double down, and what's the right thing to invest in.
Okay. And have you had any misses, any companies that have come to you that you've turned down and you've regretted it?
Yeah, probably a couple I won't name, but yeah, definitely. I think it's really hard. We invest out of our P&L, or at least in the past we've invested out of our P&L, which means you're really constrained by what cash you have available and what your forecasting is available to kind of deploy effort and team against something. It's been good because it meant that we've never had, debt, and we have it's much less risky because you're only investing with the money that you've got available from your profits. But at the same time, it's meant that we've had to be really conservative about certain things. And when we could have really doubled down and get a more outsized outcome, we probably missed those opportunities. But I think that's just the nature of the game. You can't get ahead of yourself. You've got to, I think, be responsible and look after the team that you've got, and as a business owner, make sure that the business can open up in a month's time or even tomorrow. Keep paying people salaries and all that kind of good stuff. So yeah, the misses were the right thing to miss, but there's definitely a little bit of regret sometimes.
Yeah, I like to call it the fantasy portfolio.
Oh my God, yeah.
So it's those ones that you passed up on that you wish you got involved in, and it's so frustrating to look at it now. We've got a campaign on Birchal at the moment, and their marketing strategy is around that. The people who didn't invest in Uber to begin with, or WhatsApp, or Glossier, and they passed up on those opportunities, and now you look at them and they're billion-dollar companies, and there's nothing more heartbreaking.
Yeah, but the what could have been is a dangerous game to play with yourself. Focus on what could be next. Because there'll be another one that comes around the corner, and if you're in a great position to capitalize on that, then that's what you got to focus on. Otherwise, you'll be in agony.
Yeah, it's this fun version of sophisticated gambling. I like to think it's a version of gambling that people look upon so fondly. I think, which is really interesting. And I think if you can diversify your portfolio enough, then you've got a mixed bag of opportunities, which is nice. You're putting a little bit in to a few, but those missed opportunities are the killer. And
let's face it, if you want to make the big bucks, it's for taking the risks too. So it's a constant balance, and you've got to figure out what type of investor you want to be. But yeah, it's definitely, for most people, it's definitely kind of just sophisticated. Fancy gambling.
Isn't it?
Fancy gambling,
yeah. Everybody's looking down on the pokies. No one's looking down on the stock market. No. It's wild. I think as adults we play this game of which gambling we're going to look at in a good way and which ones we're going to look at in a bad way.
Investing has a great brand.
Oh, big time.
Much better than gambling's brand.
Yeah.
And rightly so, to be fair, a little bit, but yeah.
So if you're looking for a company that you want to invest in, what are the let's say top 3 facets that you're looking for?
I think I'm pretty consistent with most people, to be honest. Firstly, it's a founding team. I think people who have some battle scars, maybe had a big loss before and have come back, or have a outsized competitive streak, or a bit of a chip on the shoulder. Basically, I find that from the founders that I've worked with, who I found the most inspiring and have achieved the most, they've often got that drive that comes from somewhere. So that's the first thing usually. Then it's got to be a space that I'm interested in, and I know that's not necessarily super strategic, but for me to get excited and motivated and see the angles, I think I've got to have a bit of a passion for that area. I can't. There'll be certain topics and disciplines I just can't get that excited about, so I will just avoid them and let smarter people focus on those themselves. Then the third is probably just around what have they achieved over what period of time to date, with either without ShadowBoxer's help, or with their team so far. And I think if you can see, it doesn't really matter what they have achieved, more about the velocity, and if they're moving fast, I find that's a really good signal of being able to get to an outcome. And from experience, there's not much point having like a really big plan. Sure, have some good goals that you can align around and be held accountable to, but really it's about your speed to learning when you've launched a product, and then as you're validating your customers and trying to get to those kind of key product market fit sort of metrics. It's like, how fast are you testing and validating assumptions, and that's a really good proxy indicator for, I think, can this business get to the right sort of metrics? And then once it's got good good numbers and data in the business, you've got good visibility on those sorts of metrics, then it's just about what are the core fundamentals, what are they signaling, what's for cash burn rate, all that kind of stuff.
Yeah, it is interesting. I think it's very similar to what we look for in businesses when we are going to be hosting a business on the Birchal platform. And one of the key features is, can they fail fast and can they scale fast? And often that's a scary thing to approach as a founder, is failure. But do you find that your failures as a business have meant that you could grow faster than you could have imagined? Because it has been quite a fast growth journey for you.
Totally. I think probably failures from or constraints from our previous life. So all those lessons helped us build like ShadowBoxer. And we're a service business really with an interesting commercial model wrapped around it that's not just about fees. But I think a lot of the lessons collectively from the founding team and the initial hires that we made from what it was like to work in digital product agencies or in consulting or in startups. I think collectively those battle scars helped inform the speed to growth that we had. I also think it's probably easier to turn on a service-based business if you've got good relationships straight away too, than it is to maybe going cold with a new product, a physical product or a piece of software. But certainly over the past 4 years, for learning I think is the only thing that really matters for a business health. If you're learning lots and you can do something with those learnings, then there's a good chance your business will move forward. If you're not learning a lot, there's a good chance that you're at risk of stagnation. You're not learning anything new because stuff's changing all the time. So it's I think there's usually a risk there. And then obviously if you're not doing anything with any learnings at all, there's a good chance you're going to go backwards if a negative learnings or things you need to kind of optimize around.
Yeah, absolutely. So for a startup, you've got a relatively big team, 30 people's quite a lot for early stage. How did you go about growing a team that was not only challenging each other and bringing different skill sets, but who could all work together cohesively and bring you to where you needed to be now?
Well, this is not always possible, right? But we basically picked people we'd worked with before or who had worked together before. So we had the core of our product team, I think collectively had worked together for, maybe 10 years in previous different roles. Okay. So imagine, your technology director, a couple of your senior software engineers, a couple of senior product designers. Imagine them all having worked together on different projects for the past few years before they started ShadowBoxer. That just skipped all of that, I guess, sort of storming and forming kind of phase. And they were just kind of thriving straight away. So that was a big unlock. So I would always encourage, when you're hiring a tech lead for your business or hiring a design lead for your business or a product manager, like who do they know? Who do they love working with? And where do they work with in the last startup? And can you kind of pluck those people in at the same time? Because often if you need to invest to build a small product team, right? Usually at the start, or expand your product team. So find people who've already collaborated together is actually a really good hack to skip some of that building of sort of team cohesion and harmony. The risk though is that you get habits and cultural traits from a different business. So you want to make sure that you're not going to you're not buying a team that comes with some baggage too when you do that.
Yeah, that's really interesting. I've never thought about that, just getting a full team rather than individuals.
It's not super easy, but for example, every startup we've worked with is will at some point hire a tech lead or a design director as they slowly transition away from us. And I've always wondered and always thought and suggested to those founders, like, hey, when you're interviewing design director, ask them who the top 3 senior product managers are or top 3 tech leads are and where they work with them and whether there's an opportunity for an intro. It saves you on recruitment, costs, and you're tapping into your team's network. And you don't have to hire those people, but they often make for really good interviewers along the way. And there's often good validation of the sort of cultural values you're looking for too. When you kind of have these people who are likely to fit it all because they've worked together really well in the past and like each other, it's a good first signal.
That's really clever, and I think the way you describe it as a hack makes so much sense. But what are the cultural features that you are looking for your team?
I think we want to encourage high accountability, and we want people to work fast. Like, one of our values in the business is today, no delay. I think if you can do it in 2 minutes, get it done. If it's worth prioritizing, prioritize it. Like, I don't put things off. I think that urgency is really important because it mimics a startup as much as possible, where actually the stakes are so high. You know, you don't know when you have a sense of when your runway is going to run out unless something happens. And I think that's a really important kind of thing to create. So we always look for that in people. So are they self-starters? Are they super disciplined? Do they have a track record of, making shit happen and having that kind of mindset? And we also just don't have time for operational guff. So we don't want to manage people too hard. We don't want to have too much process. We just have a simple OKR structure in our business, have set team clear goals and kind of let them figure it out because they're kind of senior and smart. We've inversed the typical pyramid of a consultancy. So usually you have senior people at the top, there's like a few of them, and then you have lots of midweights and then kind of lots of juniors who do all the work. We've flipped that, so we've got super experienced people at the top in the base of the period inversed, and then more junior people at the bottom. So the junior people get immersed and accelerate really quickly because they're working with super senior people. Right. And the senior people obviously get shit done fast because they've got loads of experience. Where 4 weeks of product design might take one of our designers half that time because they've done so much of it, and it's more about value-based pricing and taking a value-based approach to effort on projects too versus, just here's what it would take step by step.
I really, really love that approach. I'm a bit of a, how would I say it? I love toxic efficiency.
That's a great term.
It's just my favorite thing. Like, I am obsessed with efficiency in every single way. And I think sometimes I have unrealistic expectations of others on that because I love the theory that, if you're in a restaurant and you're working in hospitality and if the restaurant's quiet, you're going to be slower with your service versus when it's busy, and you're going to be faster and more efficient. So I like to operate in a busy restaurant environment at all times. That's how my brain works. And then when people are operating in the quiet restaurant, even when it is quiet, I find it really frustrating. You've got to be in that busy restaurant at all times,
Totally agree.
Yeah. And I imagine there's not really a lack of work to be done for you guys.
Not really. But I think, you want to make sure there's just enough fire beneath everyone's feet as a business. So we all have that sense of urgency and the need for speed. So I think that busy restaurant environment's a really good analogy, actually. I think it comes down to sometimes it's just arbitrary things, right? But let's just try and push that goal to be achieved a week earlier. Let's see if we can. And then if we can, then let's see if we can push the next one forward by 3 days too. And with every project and every sprint, you're pushing the limits of what you can do. And you've got to balance that out, right, with making sure that people have a healthy work-life balance, aren't going to get burnt out. And I think we've done a really good job of getting that split. But it's a constant fine-tuning game too, to keep that busy environment, but also make sure that people are working optimally, so they're getting fitter but not at the same time getting burnt out.
I love that. So it's like work fitness. That's work fitness, so good. So it's the harder you work mentally, the more mentally fit you are to do your job. I love that.
Totally. But like anything, right? Like you could, with your actual fitness, if you overdo it on the lifting one day, then you're knackered for 3 days. So you kind of need to make sure that you push the limits, but like a good PT would or coach would say, you only push it a little bit each time, and then maybe over a month you can do loads more, or maybe over 6 months you can do loads more. But if you dive in for the heaviest weight straight away without warming up, there's a good chance you're going to get a tear. So I think it's having that mindset too, and making sure there's enough rest for the team and enough opportunities to kind of, I guess, recalibrate and make sure you can, preserve that fitness level.
I love that. Do you reckon there's a limit to how many analogies we can talk about in one session, or?
No, it's limitless.
I love it. I could keep going for days. I used to work at an agency, a marketing agency, who shall remain nameless, and it actually made me realize what people are capable of. But they pushed everybody too hard, and then everybody got burnt out, and you'd have to take weeks off at a time because you were so burnt out. But what I took from it is that people are capable of more than they think they are. And if you've got these deadlines that you think are not achievable, they actually are. You just haven't worked that hard before. And I think that giving people that practice and the ability to actually push themselves and see what they can achieve in a short space of time can be valuable. But you're right, you need to have those breaks. You need to have the time to recover and recuperate, particularly for your brain and for your team dynamics as well. Do you find that for a lot of startups, because they do have to be sprinting at all times, that they get high turnover because they don't have enough people to take on the burden of that amount of work?
I think it's a risk. I don't think it always happens. I think the best startups and the best founders do a really good job of keeping everyone really enthusiastic about those sprints. And I think enthusiasm is probably a really critical component, because otherwise you're sprinting, but you maybe are unhappy about how much work you're doing, versus we're all part of a team. We're already excited to get to this outcome. Let's go a bit faster. To use another analogy, I think sports teams are a really good example of that, right? Like it's they're training every week, they're trying to get better and fitter, work on those fine margins. But with a team, you can sometimes get like social loafing, where actually the more people there are, then the more opportunity there is to do a little bit less. So if you dial up enthusiasm, there becomes more of a sense of responsibility, and we want to achieve this together. And that's a really important component to avoid, I think, some of the more negative associations of like around burnout, and some of the mindset that can creep in if you're just working hard and it feels a bit not aligned to a goal you want to achieve, basically. So I think the other thing would be capability. So if you don't have the capability and you're not being coached and looked after to develop those capabilities, but you're being forced to work ridiculously hard to get to a certain outcome, that can be a big disconnect too. And people can only push themselves so far without good coaching.
So you talk about incentivizing people beyond their salaries. What does that look like? How, as a founder, do you incentivize people to work towards the same goal without increasing salaries?
Well, I think the big one in startup land is ESOPs, and there's probably lots of different forms of it. But essentially having some opportunity for skin in the game of that business, so the effort you put in today might mean something super significant and meaningful in your life further down the line. Obviously, there's a good chance that doesn't come off. But if you come into a business at the right time, then it can be quite a life-changing experience to get a really good earnout or exercise those options further along. We had a slightly different approach at ShadowBoxer, because we weren't a business that was going to grow to 100 million, $1 billion valuations, all that kind of stuff. But we did want to be able to share some of the profits we made each year and some of the potential equity-related returns that we made each year with our team. So we had up until now anyway, it's slightly changed in the restructure. We had a way of each year we would distribute profits as a bonus to the team, and at a certain valuation based on the ShadowBoxer Group's valuation. And then the team could either take that as cash, or they could reinvest that in the business, and that would hopefully over a few years' time allow them to kind of unlock a greater value of that pool overall. So it was pretty complicated, but it was a great way for the team to have some flexibility and not be constrained by a typical kind of ESOP, so they can
really
access
smart
cash each year, but also at the same time, if they wanted to invest and double down and get aligned to the business goals in the long term, they could do that too.
What percentage did you find took the cash versus the reinvestment?
It was like 90% took a reinvestment opportunity.
Obviously, you're doing something right then.
Yeah, I think we were only 4 years old, right? So everyone's kind of infused on the journey and the possibilities, and it worked out to a nice, good outcome when the Reece business acquired us too for everyone. And the people who are typically taking cash out is because there's a big life moment happening. Like, hey, I need to clear off some of my mortgage, or I'm about to have a kid, or I want to buy a house. Like, there were good real reasons, and it was less about, just wanting to get more cash out from a salary perspective. It was more about like, actually, I could use that right now versus it means more to me now than it does to invest.
As a child adult without those responsibilities, I think I'd be reinvesting. So that makes sense to me. Do you feel like those people, though, who took the cash out, now they're looking at the acquisition as their fantasy portfolio?
Oh, no, I don't think so. But I think also most people who cashed out in 1 year would reinvest for next year.
That's
so
nice.
the opportunity was annual, so you never felt like you had complete FOMO. So there were some people, yes, who could have had a little bit more cash come out as part of the acquisition. But I think overall, there's not too much regret there.
The way you talk as well is like you've got your staff and they've been there for years. Do you find that you've been able to retain them for a long period of time?
We've had 2 people leave our business. One person left to move back to Shanghai to work in her family business.
Okay, I'll allow it.
So allowed. And the other person decided to travel the world.
Also allowed.
So I'd say our retention rate is pretty amazing, I would say, for an early stage business, and particularly a business in our field. That's a really good signal of the culture we've built and the environment people get to work in and how meaningful the work is.
Yeah.
There's definitely, that can actually sometimes create some challenge. We've got to monitor, hey, do we have the right culture? Is it, are we pushing people enough, or is it too comfortable? But I don't think, given everything else that we observe in our business, that's definitely not the case. But I can understand how that would sometimes be. What's the flip side of the positive aspects of really high retention? But no, I think we're thrilled, and certainly it's probably one of my preferred achievements is the fact that people came to join us at ShadowBoxer and haven't wanted to leave. It's quite personally validating that they might like to work with you, which is quite nice.
What a blessing.
What a blessing.
Do you do a lot of 360 feedback within the business?
I reckon that's probably one of our less strong areas is a formalization of feedback. We do lots of feedback. I think it's probably been, because everyone's quite senior, it's worked together for a while, it's sometimes the risk is maybe it's been a bit too kind of, I guess, conversational, informal. And there's lots of pros to that, but sometimes, some people just need a bit more structure and like some clarity around here's this feedback, here's how we're going to address it over this period of time. So we have more recently put a bit more structure around it, but the culture of feedback is something we work on regularly. So we have like staff surveys as well as, your regular kind of, fortnightly one-on-ones with team members. We just allow a little bit of flex for how people want to run it. Like, some of our senior team members, like, hey, Steve, I don't really need to speak to you about this every 2 weeks. Like, let's just catch up in a few months over lunch and we'll get it all out then. And if I need anything, I'll raise it, on the many other times that we speak on a daily basis.
Oh, bless.
But it's something you don't want to become complacent when you have a really good culture and good relationships with your team. It's very easy to turn trust to fall into a little bit of neglect. So it's, but definitely a lesson that we've kind of learned along the way is to make sure that we don't become too complacent about the relationships we have with the team. We do check in a bit more and make sure that, feedback is being heard, it's being shared, and everyone's feeling really good and comfortable because, it's super easy to not speak up and to not listen when on a superficial level, everything's kind of humming and it's fine.
Yeah, I think feedback is such a gift, and often leaders forget to ask for feedback, and therefore it can create a bit of a toxic culture where others might be talking about certain issues, within themselves, but they're not sharing it with the leadership team. How do you think that you encourage your team to share feedback with you so that you can grow and learn and retain your staff?
Yeah, I think a really easy first habit is to, every time you're providing feedback or there's a one-on-one organized, that's the perfect environment to at the end go, hey, we've spoken about you for the past hour, hopefully answered all questions around feedback. I'd love you to go away and also, share some feedback with me, or have a think about, how anything I could be doing better to help your career, help your role day to day, or anyone else in the team. Just because we're in that mindset of sharing and giving that gift of feedback, that's a great way to remind yourself, like, hey, if you've just given someone loads of feedback, the perfect opportunity in and around that moment and that rhythm to be getting something for yourself. And then equally, I think, it's really important to, off the back of, we run maybe quarterly staff surveys just to get a pulse check on, how everyone's feeling is that retention rate going to stay or are we at risk, or, where's the dial? That's also really, off the back of those things, when you see some of the more qualitative comments come through, it's a really good opportunity to kind of spark a conversation with the team and go, hey, saw some of these things crop up in the survey. How do you feel about them? How do you feel about the leadership team? And have some more of that too. And then I think it's important to, as we do with that surveys, create some opportunity for more anonymous feedback, because I think, whilst I hope it would never be this way, it's totally natural for certainly more staff to think about feeding back to leadership. Sometimes it can feel like a career limiting move if you get it wrong. What if I feed back, how will this person react, and how will that make them think about me? And you want to create a culture where that is never considered, but I think there's always going to be a tiny bit of doubt in people's mind about how they want to feedback, and so you want to give them opportunities to do it safely as much as possible, and hopefully that then creates more opportunities to do it in a less of an anonymous environment too.
Yeah, I totally understand that. My toxic trait is that I want to be liked by everybody at all times. And then when I get feedback, I'm so deeply hurt when somebody's actually just trying to give me some honest feedback to improve my role. It's hard.
Totally.
Have you had any hard feedback?
So much. I think, every time there is the smallest, complaint or suggestion about the ShadowBoxer business or about things that I know I could have controlled better, I definitely have a sulk for a small period of time to myself, then put a brave face on, and I'm like, no, that's good. That was good to receive that feedback. It is a gift, as you said. And it's really important because you don't learn otherwise. And I know I'm very fast and efficient, but sometimes I don't do things the proper way, or there might be a corner cut, which can be good for the outcome, but not always helpful when you're working in a team. And at the same time, I think that I'm also probably don't give enough of an opportunity for people to or to have conversations about why we are where we are, where we're going next. I assume that the gaps have already been filled in. So I know that's a communication challenge that I have. So sometimes when you hear it, you're like, oh, but I worked on that this last quarter. But it's important to see your weaknesses and see them as things that you're continually working on and expect them to come up in feedback, because then it's there's less of a shock. And just mark your progress against them. Am I getting better? Was this better? And go from there.
That's solid advice. Honestly, I could talk to you all day, but at the end of the day, I'm sure you've got plenty of things to do. You've got
Likewise.
to go exercise that toxic efficiency at work, I'm sure.
I'm going to use that term now. Thank you.
Oh, you're welcome. You can put it in your email signature if you like. Put
Maybe
it
I won't go that far, but yeah.
LinkedIn bio. Toxic efficiency is my jam.
Love it.
But thank you so much for coming to talk to me. I really appreciate it and can't wait to see what you guys do beyond this acquisition. It's a really exciting time.
Thank you so much for having me. It was a pleasure.